Oh, hello, you beautiful dividend investing viewer. We're live again. Once here again tonight, coming from the Dapper Dividends World Headquarters just outside of beautiful, sunny Chicago, here in the Midwest of the United States. Hey, a lot of you in here already. So happy, so very happy and pleased to see you hanging out and swinging on by the channel once again. Hey, we got another week going on here because why? It's Sunday. I don't write the rules here. That's just what we do. And before we get started, I just want to say thank you all again for everything you do. I really do enjoy being a part of this community. The emails you guys send, those of you that I talk with on Twitter, in the comments. I mean, I'm learning how to do this thing, sharing what I'm learning. And just that's what tonight's intro is going to be, or whenever you're watching it. It may not be tonight. You future people that aren't here live with us, hanging with Mr. Hooper. I don't know. Did you ever watch Mr. Who? Is that on this? Does that live on the CW now? Because if it does, that's a Next Star Media product. So anyway, thank you guys. I'm going to get started really quickly here. And hey, John, Jim, board retiree, dude, a full house. I love it, guys. So these are just some things I wish I knew about AT&T, the telecom space. Going to be really quick here because I want to hear what you guys are buying, what you're investing in. I mean, we got earnings coming up this week. Actually, we've got Verizon reporting earnings on Tuesday, AT&T on Wednesday, and also on Wednesday we got that Fed announcement. So that's going to be interesting. Everybody expects them to make a 25% another quarter, or yeah, 25. I don't know why they do that. 25 basis point hike, quarter percent. Dude, that's all the macro stuff. I don't know where they're going to go, how high the terminal rate, whatever, 5.5, 5.75. Someday it's going to come down. All we should be focusing on, at least as far as I think, is just buying those good businesses that are going to keep increasing their earnings, and the stock price is eventually going to follow. Why? Because one thing that doesn't go out of style is businesses that are profitable and in demand. So that's kind of the fad, then the flavor that I'm always going after. So the very first thing that, and then we'll get into the comments. I'll jump back with you guys and we'll wrap and I'll get caught up and all that. So the number one thing that I wish I would have known is that the telecom industry, where Verizon, T-Mobile, AT&T are all located. Comcast, I saw you, John, talking about Comcast. They're kind of there. They're not really a wireless carrier. As far as I remember, not like the cell phone type deal like that, I think is how I'm looking at it. Like the telecom carriers, like the big three, AT&T, Verizon, and T-Mobile. Two of those which pay a dividend. So the first thing is that it's so very competitive in that industry. And from what I last looked, and I wanted to share this with you guys, but stinking Statista, apparently when you view an article once and you're not a subscriber, then they won't let me view it again. But I got the numbers, is that market share of so going from Q1 2023, the wireless subscription market share of AT&T was 46% at the tippy top. Verizon had 30%. T-Mobile was 24%, and then there was a lot down a little bit lower, like US Cellular and whatnot. But that's the number one thing. It's really, really a competitive industry. Number two, and I will get to show you a little something here of what number two is that it is really capital intensive, meaning it's requiring a lot of money to stay competitive. And consumer preferences shift, right? As soon as people wanted to start streaming, like what we're doing here, playing online video games, more video on demand, all these things require greater infrastructure upgrades from your Verizon's wireless, T-Mobile's, Verizon Wireless, right? I think I said that right. Oh my God. So this, you guys, I don't know if you remember this, but one thing that I'll get slicker and slicker as this moves on with doing my transitions to the different screens. But this is from a Fierce Wireless article, which Fierce is interesting. They got Fierce Pharma, Fierce Wireless, kind of like their sector specialties for those, but this was from February of 2021, where Verizon, for the C-band spectrum, $45 billion dollars to gain a big chunk of that C-band. And I have the number right here, right there. So just highlight that for you really, really quickly. This, okay, I guess not. One more try. Never mind. We'll blew it out. So Verizon spent $45.5 billion. AT&T spent $23 billion, and T-Mobile in the third place with $9.3 billion for that C-band spectrum. And I don't know if you guys remember that, but this is what they're going to be using in a nutshell. It'll make 5G go faster and be more dependable. And that's the simplest way I can explain it as I understand it. And I'm not that techie to, you know, be telling you the nuts and bolts of it. That's all I know. The C-band will make it faster and more reliable. And I believe it might be used, correct me if I'm wrong, for the autonomous driving vehicles, which have to have that network to stay connected to, or else they're probably just going to come to a grinding halt. And then lastly, the very last thing. Sorry, I caught my face. I look dark on here, guys. I think it's time for a new light. I got this fluorescent ring light. I don't know about you, but fluorescent light is some of the worst lighting. So I think I'm taking care of that this evening. Okay, back on track, as we say. The very last thing is that because it's capital intensive, highly competitive, that the companies that pay a dividend, like T-Mobile, not T-Mobile. I was like, my brain's like, don't say T-Mobile, don't say T-Mobile. And I'm like, T-Mobile. No, T-Mobile does not pay a dividend. Verizon and AT&T do. And I think it's almost like running a race with leg weights on. So check this out. This is going to be a fun chart from our friends over at seekingalpha.com. So this here, all right, yeah, I'll try and make it as big as I can for you guys. I did it again. We're inspecting. How about function F11? Okay. Now check it out. This is crazy. This is total return over a 10-year period. So Verizon, just awful. A 6.5% return on your money for 10 years. That's nothing. That's not even beating inflation. AT&T, negative 1.21% 10-year total return. Remember, that's dividends, all income, everything. T-Mobile, just a cool 491% is what we're hanging at. Awesome. And then even just putting your money into the boring old S&P 500 with their small dividend yield is going to give you a 221% return. Granted, tech has helped boost that a lot, but that's kind of the wrap up of it, is that you can see the two down here, Verizon and AT&T, just not cutting it. And I'd love to know, what are you guys doing with your Verizon and AT&T, if you're invested or not? So that's my little spiel. That's what I had for you. And yeah, if you missed it, if you're just tuning in, you can go back and come back and catch up with us. I made it quick. Look at that. Kept it under 10 minutes. I did it. Fantastic. So I will say hello to all you. John, hey, right off the bat, John, I love it, man. If not AT&T and Verizon, who? Pretty much anybody that's going to have a higher total return, I think is interesting. Yeah, they pay those dividends, but honestly, over the past like 30 years, geez, AT&T has done nothing. It's just been pretty much flat. So yeah, Comcast is one that's interesting. Now they're a little bit more diversified, but they do have that higher. And as you said, board retiree, I think Comcast would definitely be more interesting. And you know what? How about this? Why don't we plug Comcast in there, since let me hide your comment. I want to see, for my own poops and grins, let's check out what Comcast has done. If we plug in Comcast, why don't we take out T-Mobile? Go buy T-Mobile. And let's put in Comcast. I want to see what their total return is. Update the chart. We're on 10 years. Total return. Well, look at that. Comcast, 143% total return, which is just under the S&P 500. So There you go. I mean, Comcast would have been a much better bet than going with Verizon or AT&T. This is over here. What if we do Max even? So, okay, Max tells a little bit different story where going back to 1993, AT&T has a total return from the dividends is helping it out of 276%, Verizon 53%, and yeah, S&P 1600, but look at Comcast. Good Lord, 3,177% total return. That is pretty. Now, let's do one more thing. What if you didn't reinvest dividends? I know I could play with this all night. Let's just do price return without total return. Yeah, look at the total return. Just disgusting. Just a big bucket of yuck. T is -2%. Verizon, -37%. S&P is 911, which is nuts. And again, if you just bought Comcast and received all the dividends and didn't even reinvest anything, you'd be up 2,200%. That is balls to the walls. Ay, ay, ay. I'm so sorry. That's just something I wish I would have known and seen that chart before listening to everyone say what a great dividend paying company. The thought with AT&T and Verizon was you buy them for the dividend and you don't buy them for capital appreciation. Well, I don't think that's worked out so well. So that's what we got there. What are you guys buying? What are you looking at? Do you pay attention to the macro at all? I'd like to know. Hey, my new friend Bamboozler, don't bamboozle us, buddy. How's it going? We got all the usual suspects. I really do enjoy seeing you all. I love seeing you, Ray. I love you. Welcome to Dapper Dividends. I love you. By the way, we just did join Costco today. We went there for the first time. If you haven't seen Idiocracy, it's one of the taglines in there. Everybody shops at Costco. It's just, they have the greeter. Welcome to Costco. I love you. Dude, Nick Eaton. No affiliation, I'm assuming, with Eaton Corporation, ticker ETN, which, by the way, I wish I would have held on to a little bit longer. All right, I'm going to speed through you guys, get caught up. Hey, Grace, what's up? Nice to see you in the chat. Nice. Yeah, don't worry. You can catch back if you want, whatever. At least I said hello. Take it easy as you're heading out. Kevin, you made it to the show, so let's see. What? Good question. Fast Eddie. I have been selling it off in chunks. I have 10 shares left, 10 shares in the Roth IRA, which I'm down significantly on. And I had sold some there, but man, now it's starting to creep back up. And I'm getting that the market is driven by two thoughts, right? Fear and greed. So as of now, the greed is starting to seep back in where I'm like, we're at 104, might see 110 next week and then maybe 120s. But you know what? I don't know. I'd like to just roll that into SCHD, those 10 shares. So, this week I might sell 5 more. I mean, it's going to be a long slog for 3M, not Verizon. And Grace, to the best that I can, Sunday nights we've shifted to 2 just because I'm home. I got work the next day. Even when it's summer break right now, we're usually home Sunday nights. My kids are in high school, but yeah. But next weekend though, we're going to be up in Milwaukee for German Fest, so that should be fun. And I have every intention to make the stream at 7:00. But there's a small chance if we get hung up during the day, I might move it to 8. So it'll be 7 or 8 next Sunday because we'll be coming back from Milwaukee. All right, let's see. Bam says he doesn't know why everyone freaks out when they know what's going to happen when the Fed. Yeah, we know it's going to happen. I look at it as we have no control over that. And as they do keep increasing rates, we've seen it suck away that capital, right, from the dividend paying companies, from dividend stocks. Why? Because individual companies are risky and the black swan event can happen. They're more risky than bonds. I guess your main risk with bonds is government defaulting, which is pretty unlikely since they can literally print money. But Honestly, I think if and when rates start to come down, that there's going to be an influx of money, of capital into the, safer dividend stocks, and then maybe even more speculative ones as investors start seeking yield. So, but you know what? Gary, what's going on, Gary? Why did you just talk like George? But I don't know who did that. My apologies. I understand I fool around with accents, and as somebody who doesn't have an accent, I understand you guys who do, and no disrespect. It's just got to be so weird having an accent. Someday maybe I'll understand. But BCE Communications up there in Canada, I have looked in, it was years ago. For about 5 minutes, I looked into them, and I think I was turned off because of the Canadian tax on the dividends. But from what I understand, they're very solid, and maybe I should take another peek at them. If you'd like me to, I could. Yeah, Kevin, he's slipping in through the unguarded door. Dude, that door, we got to get somebody on it. We got to get a password. I don't know. Papua New Guinea is the password just because it rolls off the tongue really nicely. Look at this. Puckman from Bradenton. I was going to say Brandenton. Bradenton. Where's that over in up there in Canada? Maybe. I'm thinking. Sorry, John used to sell Thompson. I must have missed that. Let's see. What do I think of Amazon offering cell service? They're not building out their own infrastructure. So, in a way, they could be one of the big winners. Now that I think of that, um, kind of like, right? Like Google uses the internet. Like, look at all the AT&T and Verizon are bringing the internet to us, but some of the big winners have been Microsoft, Google, I guess Amazon, like AWS, but they're not building the cables and the 5G and the C-band spectrum and the phone lines and everything that we use and the routers and the modems. So I think it's a different thing. They're right. Wouldn't that be like piggybacking off of the cell phone providers, the wireless providers? But yeah, I don't know whose network they're going to use. I don't know. Maybe I'm speaking wrong about that, right? They're going to have to use a network. So I don't know if they're going to, I don't know how that all works, honestly. So, VZ's on sale. It's been more than on sale. And yeah, I think I am holding somewhat probably foolishly and waiting for them to come back in share price because I'm stubborn to a fault. I hate selling at a loss. I don't know if you feel the same way, but and there's a prevailing thought that you don't have to make your money back the same way that you lost it. So just because I'm down on 3M, Verizon, AT&T, Intel, Alibaba, because I'm down on those, right? It starts to make you think like, geez, this guy know what he's doing. But you don't have to make it back on those waiting for them to come up because maybe they never will. Good. C-band refers, thank you, somebody in the know, is the electromagnetic, yeah, blah, blah, blah. It's the electromagnetic spectrum allotted for satellite transmissions in the 4 gigahertz to 8 gigahertz frequency range can become degraded due to heavy rain or intense climate. Okay, good to know. That's good to know. And again, for somebody that is not in the know with all that, a lot of that is I'd have to do a lot more trying to really understand it to see like what that's something I've talked about. I don't know if Casey's in the chat, but we've talked about like really understanding what gives a company their competitive advantage and gives them a moat. And if you can understand that, then when something happens and the market panics and all the weak hands sell, you can come in and swoop up shares because you know that the fundamentals of the business are still sound and intact. And it's just a matter of time, right? Like Benny Graham said, the prophet, Benny Graham had said that over the short term, the market is a voting machine, and over the long term, it's a weighing machine. So, the sunshine window. Yeah. I'm going to have to change this up. I have one freaking ring light going on here. And it's just not, as I'm looking at myself and I'm like, boy, these fluorescent lights sure do light up all the every wrinkle, crack, crook, no, crooked crack, cranny, and whatever crevice that's on your face. Fantastic sea lights or sea lights, C-band spectrum. It's burning a hole in my brain. New tattoo of VZ or T. Oh, neither. Man, neither. I don't know. That would be tough. Okay, hanging on the Verizon for now. Yeah, I don't know, man. I'm gonna just stick with what I got. I'm not gonna add, but this is what I was just gonna get to is you can, if it's in a taxable account, you can tax loss harvest. So I think I think we could see a lot of tax loss harvesting going on later in the year. Gary's the smart one here, the smart man in the room, not owning either one, at least on their own. If you own SCHD, you own Verizon. I would be okay owning it just inside of SCHD. Yeah, oh, the Swami. We're blessed by the goodness graces of the Swami. Um, I agree. Dude, DirecTV was a mess and Warner Brothers was just, I think Stanky has overseen the incineration of some like 70 billion of capital or something like that. Just nutty. Kevin, you stopped DCAing T. Probably smart. There you go. And these are all lessons. This is what we do as investors is we got to learn and we've got to just look forward at what we can do different using our past experiences, right? Look at this. A new person in the chat. Thank you, Sprout. I like that logo. Pretty nice. Oh, look at this guy. He's got the skull inside of the shamrock. I thought that was the Misfits logo for a second. I was going to like, oh, looks like somebody's going to be getting a new St. Patrick's Day shirt. Had AT&T for a few years. Yeah. You know what, man? Thank you. Well said. And I just had to learn the hard way. And I'm hoping, praying to the baby Jesus that AT&T and Verizon will return once more. I think Alpha Spread, because I was just looking, gives them an intrinsic value of like $30 AT&T and 19 on the bear case. Don't know about that. Yeah. So yes, that's what I was saying is a lot of people, the prevailing thought is that you buy AT&T and Verizon for the dividends and not for the growth or capital appreciation. But man, when they're constantly getting hammered in share price, it just doesn't matter at some point. Like we just saw, and those of you just tuning in, I shared a chart showing the 10-year total return of Verizon and AT&T, and it's just awful compared to even T-Mobile, which doesn't pay a dividend. So yeah, man. Funny, Costco's great. And Fast Eddie. So we've never really shopped at Costco. We had been in a Sam's Club a couple times years back with my father-in-law, but yeah, it's what I thought it was. It's lots of bulk good deals and made me think like, dude, the place was slammed. Oh, one of the hacks that I saw with Costco is that you can get a bundle of gift cards. One of them we saw was, I believe it is 4 $100 or 4 $25 Starbucks gift cards for $79.99. And they had that with a bunch of things like Roblox. I think Roblox gift cards, there was $100 for like $89.99. So kind of cool. That's something we're going to look into. I'm not going to quit my job and just be selling them on eBay. I know people have already done that, but let's see. Comcast is Jay's stocks choice in the sector, man. Nice. Yeah. I own them for a minute and I put that into, I don't remember I think more Nexstar Media is what I used to buy just because I think they're so far undervalued and they should easily be over $200 a share. And I'm banking on hopefully the market one day will realize that and it'll start going up. So I'll be looking forward to their earnings. If I had 1,000 to invest, my number one draft choice. Ooh, I like that. Honestly, it depends. If it's just me and my age now, I'm looking for capital appreciation a little bit. but at least solid dividends that are growing. And I guess I have a lot of time. I'm 45. I've been, I'm inclined to say Aries Capital, ticker ARCC, because I think they're solid. They're over earning a little bit right now, but I guess I'm looking for that higher income that I can reinvest in compound. But man, it's the age old question. It's like, do you want current high yield but low growth, or high growth but current low yield? And I believe when they do the back testing, it is the low yield, high growth that over a decade or more will end up being the better performer. So it's a tough one to say, man, to just choose one. But I guess I would probably, Aries Capital, that might be too. If I might just do SCHD, just because it's such a no-brainer thought for me. I know Morningstar just upgraded it to 5-star gold for whatever that's worth. So, oh, I see a comment I want to get to, an interesting one that you might want to look into. 100 shares of Coca-Cola at 17. Dean, baby, that's awesome. You've got to start somewhere. And like I did it with PepsiCo. If you guys don't know, I bought a share of PepsiCo every week for 100 weeks. And one of the big lessons I learned is that I think they're a good company. Free cash flow payout ratios kind of got me worried right now. And I want to see that coming down like relatively quick. But at $140, $142 a share, when I was buying PepsiCo there, everything was saying it was overvalued. It's really expensive right now. And I kept buying. And the lesson there is that if you think a company is solid and they're going to keep earning and growing their earnings and profits over the next 5, 10, 15 years, well, guess what? The stock price is eventually going to follow. So I like that. Dude, lazy is good. Lazy is beautiful. So yeah, I think it is the lazy. I call it the easy button, but I love it, man. Show me the money with the lazy dividends. You got Kevin still buying. Kevin, I hope you're right, man, because I'm looking to exit all three of those, but not right away on T and VZ. I'll hold out a little longer. Now, this is interesting. I haven't seen you on this channel. We ain't seen you around these parts before, partner. Parts and partner. That Hershey, HSY, Hershey is the future, because I just read a little blurb, a little bit of a short report. Don't remember who put it out. Yeah, it was on the Bear Cave newsletter. If you subscribe to Bear Cave, it's a free newsletter that goes to your inbox every Sunday. And there was a note about Hershey potentially being impacted by Mr. Beast's Feastables and I heard Mr. Beast on the Colin and Samir podcast, where he really wants to go after Hershey's. He says it's pretty much almost been a chocolate monopoly. Maybe he used duopoly with Hershey's and I don't know, Mondelez kind of in there. But yeah, they say it could potentially be a threat. There's a lot of excitement. There's a lot of sales that are growing a lot over Mr. Beast's Feastables. And if you go to Walmart, people dig them. I don't know. I don't really eat chocolate, but oh God, I thought you were in Canada because I see you got the goalie pads on and your little thing there. Little thing. You like that? It's an avatar, but it could be a little thing. Yeah, Jay. Haven't bought them in over 3 years, just holding. I think that's what I'm going to do. Hey, buddy, I'm getting caught up. What have you missed? Basically, here's my recap. That AT&T and Verizon, what I wish I knew is that it's and I think this is why Warren Buffett doesn't invest, highly competitive industry, capital intensive, and the ones that pay dividends, I think it hurts them more than it hurts their long-term growth prospects. Just like we have a T-Mobile plan. We're on T-Mobile for the military veteran plan. And I think because they don't pay a dividend, they have more cash, gives them a lot more flexibility. They can, be a little bit more competitive with some of their plan pricing. And I just think in a highly competitive space, if you don't have a very, very solid moat that it makes it difficult to grow the business when you're paying that dividend. So yeah, Trevon, I'd like to know what you guys think. Those of you that know Mr. Beast and follow him, have you ever had a Feastable? What do you think of his Feastables? Be still, what's going on? I have not heard of a convertible debenture. Um, yeah, anybody let us know what you think if you haven't answered it already. Okay. Oh, you answered your own question. All right, cool, man. Like it's a kind of long-term debt which can be transformed. Yeah, I think that's almost like warrants, right? It's similar to a warrant then. Something like that. ROK. Was that Rockwell? Yeah, I don't I've never looked into them. Let's check, guy. Because I like you and you're my friend. I'll let you pause the screen real quick. Let's see if I was right with good old Rockwell. Let's see. You know what I didn't do? I didn't set up my phone. So I don't know. Well, I'm looking here. I'm pretty sure we're sharing. Yeah, Rockwell Automation. So I was running around like a lunatic. Dividend safety of 70. I'm going to go through this a little bit quick. And if you want to, you can go ahead and pause the video and look at it to your heart's content. Dividend growth, 20 years uninterrupted, 13 years growing. Yeah, it's pretty, a little bit smaller so you can get all on your screen. Get all on your screen at once. 5.4%. That's not bad. Let me look at a couple of the financials. Looks like they're getting ready for a dividend increase because of you see how they got 4 raised, 4 payments raised, and that's 4. So they should be getting ready to raise. And the dividend yield is, sorry if I'm making you sick with all the, stop scrolling, 24% below the 5-year average. Again, PE is above. I don't look for that. So they're at the high end of the 52-week price range, which is a good thing. Usually companies are at a 52-week high because something good's going on. All right, free cash flow payout ratio is dropping. I'm going to go quick here, man, because I want to get to the comments caught up. Free cash flow per share expected to be $14.90. That's probably why they're at all-time highs. Sales growth is up. Earnings per share growth still good. Looks like a solid company, man. 116 million shares outstanding. Sales have started going back up. And, dude, really high ROIC, really high ROE. Just, wow, solid company, man. Net debt even coming down was 89%. And my favorite, interest coverage ratio, they're good. So I don't know, man. I like them. That looks like a very solid business just from that really, really quick run through. That's solid, man. I'd give them a thumbs up, but let's see. The Kenview shares. So what's going to happen from I just listened to my guys on Dividend Talk go over this, is the split off, not a spin off, but a split off. And what it is that essentially they IPO'd Kenview, and those of us that own shares of Johnson & Johnson are considered the insiders. That's my take. And when a stock IPOs, the insiders, they can't sell the stock for 6 months. It's called a lockup period. So that means that 6 months after an IPO, you may see a big dip in price because some of the early investors could have gotten into something at like 10 cents a share, and now it's IPO'd and it's selling for $20. And even if it comes down to $10, like they're still making bank. But I take it as we're the insiders for J&J. So that should be, it was in March that they did the IPO. And then in October, right around Halloween, is when the insiders would be able to sell. So J&J, because they own like 90%, I believe, of Kenview, they are going to distribute that to the shareholders if we want it, but we don't have to take it. Does that make sense? Is that pretty much the gist of it? Have I gotten that quite right? All right, I want to get caught up to you guys. I need to, oh yeah, I want to highlight this. Guy started, he makes me nervous because I like sharing stuff, but I don't want someone to be like, I started buying a share of 3M a week and now I'm, my kids can't eat food. And I'm like, uh-oh. Now Visa's solid. So Guy wanted to get to 100 shares of Visa. So I don't think he's doing it, but Dude, that's a big win. Thanks for share your wins, guys. I want to read it. I want to share it with everybody. That's motivating. Guys at 54, he's going to get there. You're over halfway, man. Keep plugging away. Very solid company. And I am working my way back to you. Here we go. The Feastables. Oh, so did you read that? Yeah, I don't know. I agree with you, John. I think the Feastables is a stretch that it's going to bring down like it's like David and Goliath. Hey, David's got some. He's got some oomph, but in this story, I'm not sure that this David is going to Mr. Beast, Jimmy is going to bring down the Goliath. But hey, we'll see. Stranger things have happened. Yeah, I might have to try one of those. That would be I don't know. If I come across one, maybe I'll try it. But I forget. I was supposed to try the PepsiCo, the disgusting, remember on Easter when we saw that they were selling the Peeps flavored PepsiCo, and I was like, that looks disgusting. Maybe I'll have to try a Feastable. I'm not really a big candy or chocolate guy, but I would maybe we'll do that. Maybe I'll just put that on the thumbnail. I don't know. Yeah, that's somebody's gonna steal this from me now. Maybe I shouldn't say it. I don't even care. I'll say it because I said it here first. Maybe I'll do that. Say, um, should dividend investors be worried by Mr. Beast, or will Mr. Beast crush Hershey's dividends or something? I'll come up with something, and then I'll try a Feastable live. That might be fun. J&J earnings were very good. They went up like $10, $11 a share. And Cody, this is my friend Cody, by the way, who's also in his headquarters. I don't know if you have a world headquarters too, but it's right around Chicago. Let's see. Oh, dude. First of all, I'll get you. Hey, Nora, what's up? Crazy live stream yesterday. We were scratching off scratcher tickets. Loved it. My buddy. My buddy. You don't. My buddy. My buddy. My buddy. Me. I just saw that was me just getting lost in a fond memory. Wasn't it? It's coming back. Wherever I go, he goes, my buddy and me. My buddy. Okay. Enough sentimental one-way street. You got me to sing. And Jason, right? Did I remember that? I think your name's Jason. I apologize, man. If it's not, I'll refund your money. I don't know, somehow. But by the way, Jude, thank you. And I always say to all of you, you don't have to do it. I could probably come up with 101 way more important things you should spend that $5 on than giving it to me. But if you absolutely feel compelled and you're going to lose sleep over not giving me $5, hey, okay, we'll take it. And my family will say, thank you very much. Really, thank you. Appreciate that. Yeah, maybe the real Willy Wonka. He might, he did that. I haven't watched this video, but he did give away a chocolate factory, right? He was dressed as Willy Wonka. Let's see. You will be close to the Allen Bradley clock here in Wisconsin at German Fest. Dean, are you in Wisconsin over there? Yeah, hey, yeah, hey there. You guys don't even say that. That's the Yoopers, right? That's way up in the Upper Peninsula, which I think is Michigan anyway. Shows what I know about my Midwest geography. I don't know what the Allen Bradley clock is. That the big clock? It's the big clock in the big brown building, right? Like by the expressway, I think. Let's see. Good tip here from Guy. Don't worry about buying companies all-time high if you buy long-term. You know what? And I say that too. You bought V when it was overpriced at 180. Man, I love that. I really love that because if you look back, I remember reading Warren Buffett saying he thinks he should have sold PepsiCo when it was at a PE of like 50. And I look back and say, why, Warren? Why? You would have had to buy back when it came down a bit. But if did I say PepsiCo? I mean Coca-Cola. When PepsiCo was way overvalued in the late 90s, if you look back now and consider the total return of the dividends and everything, it's irrelevant. It really doesn't matter. So, yeah, it'll be a slow week for dividend payments. Okay. Yeah, we've got some earnings going on this week. I think Microsoft is Monday or Tuesday, tomorrow or Tuesday. All right, good, good. Kenview, it's a little weird if you own less than 100 shares of J&J. Yeah, I don't know why it would be weird, but um, yeah, that's what I take it as. And I don't know. I think I may not take the Kenview shares, but we'll see. I got some more time to think it over, a couple more months. What are we talking about, John? Intel. Well, I'm assuming you mean Intel, right? INT. Yeah. Intel actually has never recovered their all-time highs. So, but that was like a bubble stock, though. I mean, that was just, I wasn't investing, but I do remember those days back then. Little bit hazy. Yours truly was, I sum up those years as drinking, gambling, and women. That consumed most of my money. Unfortunately, I didn't invest, which goes to show you that I invested in some very hazy memories. And unfortunately, we're all young, dumb, and make mistakes. But, you know, Feastable taste test, Mr. Beast for Hershey's. I should do it. It's been a while since I've had any Hershey's chocolate. Maybe I'll set that up. I'll see if I've been super crazy at work lately. It's just been ridiculous. We lost the tech, and we've just been. I mean, it's good. We're making overtime, getting a lot of money and whatnot. But I'm gonna have to see if I do. If I run, I might pop into a couple WalMarts, and if they have a Feastable and a Hershey's, I think we have Hershey's upstairs. My kids love it. All right, I'm almost caught up to you guys. I need that work my way back to you, babe. Let's see. You see how that happens? I love it. As soon as he sings, it's like we drop. People like stop singing. Dividend yield already. Yeah. Is Kenview legit? Oh, heck yeah, it's legit. I mean, you got like I think Neosporin, Listerine, Aveeno. You've got well, the baby powder, the J and Johnson's shampoo, like all those things. I mean, those brands aren't going anywhere. Maybe the baby powder. There might be an issue with the baby powder, but as far as the other ones, nah, they're not going anywhere. They'll be fine. Intel was 64, now down to 29. Yeah, that's what I'm waiting on. That dude, why? You gotta. I think I got it right. You said yes, sir. So buddy, no more. Just sit on your wallet and your hands for the rest of this. The next 17 minutes. Like, we really do appreciate it, and it's making me uncomfortable. I don't know what to say other than thank you. And I don't know if you were a Star Wars fan. I don't know why I'm doing this. I just looking around. We're going through some old stuff. I could do show and tell. Anybody know what this is? You got to know. Oh, please focus. Hold on. There we go. Do you guys know why won't it focus on this guy? Please, Mr. Camera, focus. Anyway, I think you guys know what this is. Somebody tell me what this is. And I don't think I'll send it to you. I don't know. We'll see. We'll see. All right. Dude, but seriously, man, thank you again. You just stop it. Sit on your money. Like, go give it to a homeless guy in your town or something. I don't know. Like, I appreciate it, but I'm doing this for the fun. Just your viewership really is enough. Honestly, you guys watching, I get a teeny tiny little bit of ad revenue from everyone that watches. That's good enough, man. That's good enough. All right. Oh, there he is. Well, this is the guy to ask. I was just going to say I had talked it over with Kevin Burgess, which I had fun when we did that live stream on your channel, man. I enjoyed that. And I what's he stumbling over his words for? It's because I have 1,000 thoughts that are all trying to, it's like, have you ever seen on Black Friday when there's 1,000 people waiting outside and they're all trying to rush into like 2 doors? That's kind of how it is. I've got like 1,000 thoughts and they're all trying to like rush in and anyway, so did a quick update on Jane. There you go, everybody. We've got to watch that when Kevin puts it out. I'll probably share it, man. I may forget. It's not intentional, but if I remember, I'll share that, and so everybody can get up on that. Tylenol, clean and clear. Yeah, Kenvue's not going anywhere. They are Neutrogena. Exactly. Yeah, you think I don't know. That's interesting, man, that you think we're sleeping on Kenvue. I like it. And it's gonna be interesting. This will be really interesting to watch because remember what I said about the insiders being able to sell an IPO. Well, I don't know because I got to watch Kevin's update because if we have an option to take the Kenvue shares, I think we will lose some of the J&J shares if we get Kenvue. I don't know. Now I'm starting to confuse myself. I'm glad you like that. Yes, it's the Imperial Guard. The yeah, I love it. And you got it, man. Good. Let's see. Some crazy stocks with donations. Zim. Man, I can't do that. Zim's legit. They're okay, but highly cyclical. I remember back when I was swing trading stocks and in the penny stocks, like I think one of them was like Diana Shippers or Diana Container or something like that. You know, yeah, Red Roll, Return of the Jedi, dude. That was yeah. This was a bank from when I was a kid. This was like 1983. I got this. I wasn't, I don't know what I'm going to do with it. I looked on eBay and it's like, I might get a few bucks, but Cobra Commander. Dude, I loved G.I. Joe. I love Transformers. I'm a kid of the 80s. Imperial Guard. There you go. Ding, ding, ding. We've got a winner from the coconut. I'll drink my water to that. Now this, yeah, that's what we were just, good. I'm almost live. Yeah. It could be so the insiders could sell, and maybe Jeremy, maybe you know some of this, but dividend stockpile, dividendstockpile.com. Jeremy's just, what is this? I don't know. I'm just Italian. I'm not Italian, but I gotta say less because as I understand it, Kevin, correct me if I'm wrong, but I don't want you to give it all away. I want people to watch your video too. But so I hold J&J shares on the end of October when we're able to partake in the split off. If I do nothing, I believe I retain the J&J shares, kind of like with 3M when they did their food safety business, when they split off that. We could either trade, I think it'll be the same thing, right? We could either no, there was no lockup period for that though. I don't know. It's interesting, man. You're always learning something new. I really do love this. By the way, Jim Betts. Jim, we had some really cool email exchanges a week ago, and I do appreciate that, man. Thank you. That was really interesting life. The man met General Petraeus. He was doing work in the Middle East back in the 90s. Interesting stuff. 5 shares of Kenvue, anticipating the spinoff, keeping it on the radar beforehand. Oh, here's some shares. Yes. SVOL. Is that, dude, did you buy those? So SVOL, I think that is shorting the VIX, which the VIX is the fear gauge. And right now it's pretty low. There's not a lot of fear going on. So SVOL, that means if the market is going up, you're doing well because it's shorting the thing that does well if the market goes down. So confusing. I know. TSLY, that's the Tesla derivatives, the synthetic covered calls, I think, something like that. And GOF, I don't know GOF, but if you had another F, that would be Jared Goff, who is the quarterback of the Detroit Lions. Anyway. Oh, yeah, Kevin. Kevin's got some chickens. He was supposed to do it. Is he smarter than a chicken? We're looking for it. He's going to test. I told him he needs to pick one of his chickens, put some feed pellets on like 4 different stocks, see which one it goes to first. And then Kevin can pick a stock to see if he can beat it, Let's see. Uncomfortable super chat. Yeah. Well, it's going to always make me uncomfortable, I'll tell you what, man. I'm going to do it this week. Maybe when I get off of this tonight, I got a short I'm going to record. I'm going to do 3 or 4 really, really quick. I've found some undervalued dividend stocks that aren't really talked about. A couple of them are, but a couple of them aren't. And I'm going to do a short to have it come out tomorrow afternoon. and just really, it might be like 40 seconds long, but just something to give you ideas and be like, oh, that looks interesting. Maybe I'll look into it. So, um, anyway, thank you. But yeah, I don't know. It just makes me uncomfortable, but I enjoy it. I enjoy doing this, talking with you guys, and it's self-indulgent, really. Just all right, Bamboozler. Hey man. Hey, buddy. Just has a big earnings week. Oh yeah, Verizon, Microsoft, Coke, British American Tobacco, AbbVie, McDonald's, WP Carey, and Google. Google. Those are going to be a lot. And honestly, boy, if AT&T misses the free cash flow guidance again, I think that we could see closer to $11 a share. I think a lot of people are going to say, I'm out. And Pascal DeRoche, their CFO, I remember he made the point, and I drink the Kool-Aid, and it's just a problem I have with some things that I think I want to hope and believe that they're going to do well. He said that, yeah, we overshot our free cash flow guidance, but we've done a lot of capital expenditures. The end of the year, or the beginning of the year, we have high capex. We've been doing a lot of investing. He says at the end of 24 is when they're going to really start to reap the rewards of the investing in 5G and the spectrum, everything like that, fiber. But he says that as the year goes on, their free cash flow gets better. So this is a pivotal earnings on Wednesday. Look out. If they miss again and it's bad with the free cash flow, I think they're going to get hammered. So, we don't know what's going to happen, but oh, good. I didn't know this. So Kenview pays 20 cents, says Jim Betts. 20 cents per share. Yeah, we'll see if they're going to raise that. Who knows? Kevin's chickens are good, everybody. We'll be, next week we'll check in, make sure those chickens are still good. No, let's see. The only shorts I watch have to do with girls in yoga pants. Hey, you know what? Beautiful, man. It's you do you. It's legal, and I don't know. My wife's, she probably can hear me. She's like, you should do topless investing. I was like, well, no, it's going to attract the wrong audience. Trust me. What is that? Jubilee Chicken? JBFCF, dude. All right. I'm not going to take you guys with. Let me put JBFCF. FCF. Jollibee. What the hell is Jollibee Foods Corporation? What is this? I've never heard of all these. The company operates quick service restaurants under the Jollibee, Chowking, Greenwich, Red Ribbon, Yonghe King, Hong Zhuang Yan, Mang In Asal, Burger King, Highlands Coffee, Pho 24, Pho 24, Smashburger, Tim Ho Wan, Tortazo, The Coffee Bean and Tea Leaf, Yoshinoya, Milksha, and Panda Express names in the Philippines, US. Well, they don't pay a dividend, but they're $4 a share. That's a wacky one, dude. There's your weird stocks. That's interesting, man. No rating on that. None at all. It's just, but it is a $286 billion mega cap company. That is just the strangest thing. But it does look like they might pay a dividend. Oh, because they're in the Philippines. That's why. The dividends are in Philippine pesos. Sorry, I probably could have showed you guys that, instead of me just you watching me read. Like, anyway, interesting, man. Very interesting. We got Lady Midgets in yoga pants, and he's in. Hey, again, we got midget wrestling that I see over at the bar across town. I haven't seen it, but I see the flyers for it. Yeah, that's interesting if the deal's going to go through between Activision and Microsoft, and shows what Warren knows, right? He really started paring down their stake in Activision Blizzard. As you're building your portfolio, do you take any consideration for X when building your PEP 100 shares? I think you're talking about X dividend dates. No, I didn't. I literally was buying just one a week. That was the whole thing. And I usually ended up waiting till like Thursday or Friday because I was afraid that after I bought, the price was going to drop. So I usually pushed it toward the end of the week. But yeah, I really didn't have any. Um, so you'll be to allocate to one stock. Oh, I don't know what you meant then for X percentage, maybe? No, I should have, but I didn't. I didn't. Oh, we have that around here. Typically, agent spots. Yeah, I'm not like Chinatown down there on off of Cermak near Cermak and State. By the way, shout out to all of those, all of those of you watching the live stream from Reggie's Rock Club down on State and Cermak in Chicago. Nice plug. Yeah, fun place. Nice rooftop bar they got over there. If I own 111 shares of J&J, then I will get 111 shares of Kenvue. I don't know about that. And I don't think it would be 1-for-1. It would probably be the price the same. I mean, all right, Shamir, where were you, man? I got worried. I was about to call not the Garda. What's your police there called? Poliza? I don't know, the French Canadian police. Police. Hey, what did I wish I knew? Okay, I'll give you the rundown. Those of you that may have just popped in, I wish I knew how capital intensive the sector was. I wish I knew how competitive it was, and the fact that Verizon and AT&T pay a dividend in a highly competitive and highly capital intensive space, that it is more of a hindrance, I think, on how the business can grow. So, and we evidence that by showing the 10-year total return chart where T-Mobile is up, but almost 500%, and AT&T and Verizon are basically flat in 10 years with dividends reinvested, and T-Mobile doesn't pay a dividend. So that's what I learned. That's what I wish I knew. And I said a few other things too. Building could throw off your allocation. Yeah. No, PepsiCo at one point was like 14%, and that's too big. So naturally, I knew that as I just keep investing, keep reinvesting dividends, that it would start coming down, which it did. So what did you say? Hey, I want to build 100 shares for here forever. Yeah, exactly. Pretty much. I wanted it to be a backbone. I just wanted to do it, I don't know, maybe it was sniffing paint or something. I don't know, but yeah, I thought it was a good company, and they're not going to go anywhere, and they're just going to be around for a long time. Although that free cash flow payout ratio, it's giving me a little bit of heartburn as of late. Yes, Clifford, we would have had to call the RCMP, the Mounties. And, oh, by the way, well, happy birthday, Shamir. To one of the big and longtime supporters of the channel, we thank you and wish you a very happy birthday. I'm not going to sing because, not going to do that. And then I want to answer this before we bug on out. Yeah, that's pretty much one of the big problems. If you're getting an 8% yield, but the stock has dropped 30%, hey, that 8% yield, it doesn't look good. It's duh. It doesn't look good. I shouldn't do that. Do I invest in Missouri? No, I don't invest in Missouri. No, do I invest in Altria? Ticker MO. I do invest in Altria, and I had thought about buying some more Altria, but I did not. So I'd like to see it a little lower. Maybe that's getting greedy. I kind of want to buy it more around 43, 42. I would like to add some more, but that's my thing. And hey, Dean, is that you're up there near Milwaukee, right? You're over there. We're going to be there. Like I was saying, we're going to German Fest. So if I bump into any of you at German Fest, say hello. I like it when people say hello. And I do intend to have a live stream. I don't know if it'll be the Feastables one. Could be fun, could be a quick, easy way to get the thing started. So, hey, I got a question for you before you guys go. What do you think because like Ryan and I talk about stuff like this. Excuse me. What do you think about having a topic to get the show started? We try to do it so it's like quasi content, meaning that the beginning of the stream will be something useful that can help somebody, something we've researched or experienced or done. And we try to keep it relatively quick. But I don't know. I've told him sometimes I think about just turn the camera on. Hey, what's up? What are you guys buying? I don't know about the replay value of that. So I don't know. I'd be curious to know really quick some of your thoughts. If you even care, does it matter to you? Does it get boring when we're sitting here telling you about what we've learned or something we've done? I'd like to know that. And same thinking. Oh, you know what I should have done for you, Freedom Stacker? I should have done for you, Jason. I should have done this for you because I forgot to play this for you.
Thank you, thank you, thank you, thank you, thank you, thank you.
Eddie Murphy. Eddie Murphy says thank you. And because you did it twice, I'll give you.
Thank you. Thank you. Thank you.
Give you the Peter Griffin. I think that's it. Oh, actually, here's one. This is one you'll appreciate, Jim. I got one more thank you loaded up. Here we go.
Thank you. Thank you. Thanks.
All right, I lied. One more. Do you guys remember the Love Boat? I remember the Love Boat as I was a kid. My grandfather used to love watching the Love Boat. I was small little itty bitty baby cheerins, 1981, 1982, something like that. I didn't get it. I just remember the music, the Love Boat. But I came across this thank you clip and I was like, oh, that's why my grandpa used to love watching Benny Hill and the Love Boat.
Thank you.
Yeah, that's man, right? Sorry, I kind of blocked it with the current comment there. So, all right, I'm going to get to I just want to hear what you guys said. Good. Thank you. Then I'll keep doing that topic segment. That's probably what I should have called it too, right? Good. Love to hear, man. You always enjoy it. And I think we'll just continue keep doing that. Just, it's funny. I don't want to spill the beans, but sometimes Ryan and I are like struggling for something. So we'll just, you'd laugh if you saw how quickly some of this we put a lot of work into. Some of it, just not going to lie, not too much, but you guys can tell. But we love you and we appreciate you. So market recap from the previous week. That could be interesting, but it could also be, just like what the S&P did or the market up, down. Yeah, I mean, yeah. All right. Yeah. And here, I love this. Ryan recently did How Old Were You When You Started Investing? What a waste of time. Well, that just speaks to what we were saying. Don't want to be negative, but Russ. Yeah. Well, like I said, man, it's his full-time gig, Ryan Williams, by the way. So him and I text all the time, just, inside baseball things. So it's, we're learning, man. We're learning, we're growing. I'll share that with him. I won't tell him you said it, but I'll say, it'll probably bug him. By the way, I think he's in Disneyland this weekend. Hope he doesn't mind me saying that. So anyway, Dean, thank you. You've said it. You've kept me on track. I'll sit here and talk all night until my voice goes away. So everybody, once again, from my family to yours, we really do appreciate everything that you guys do, meaning just watching, commenting, being here. You all are beautiful people. We really do appreciate, and I thank you so very much for spending a little bit of time with me on your Sunday evening. So got German Fest in Milwaukee next weekend, but I'm going to head home from that and pop on. I'll have another topic, maybe the Feastable. So everybody, thank you for watching. I will see you next time. So long, everybody.